This is Steve back again here with Forex Trading Coaches, ready to do some analysis for the CAD-Yen pair. We're also going to talk about the Euro-Yen and what happened based on the video that we created yesterday to help you get an idea of how to use these videos. So we'll take a look at that, but first we will do the CAD-Yen analysis. So let's go take a look at what we see on the CAD-Yen. Okay, as always, starting with the top down. From a historical perspective, there's not a ton of information that proves that it stops here. There's not a lot of history to work with, but it's quite the rise up on the monthly. There is a little bit of a blip in the monthly chart right here where it can drop down, 300-400 pips somewhere in that region. And so if we go take a look at that spot on the charts here and go see how that looks, when it did that drop, let's go see what price looked like. Okay, and so it kind of chopped around for a few weeks, 2-3 weeks there. And on top of that, if we go take a look at the day chart, that's right here. And you can see it chopped around for a couple weeks here on the day chart when it sold off 253 pips, and it sold off 190 pips, and it sold off these pips right here. This is the region that we're talking about. So that's kind of the area that we're back into right now. You can see it matches right over here. And on top of that, when we come down to the lower time frame, to the weekly chart here from the monthly, come down one time frame, you'll notice we're getting quite a bit of rejection thus far up here on this Canadian yen. So big rejection candle, also some candles closing inside this low, so weakening up there. And the daily, the second time around, is also weakening up here. So if we continue to weaken and start to drop like historically happened here just, a month ago, then we could definitely get some selling as price drops down through this region. How are we going to know that? Well, start comparing the look of what it looked like last time it dropped and compare that look to now. And if we start looking like this with lots of red candles and breaking through, say, 9,800, and getting into a stronger downtrend, then there's definitely room for selling historically. Down toward 97.38, down toward 96.50, and then you can see on this chart here, 95.80. Now, what about what happens if the alternative? Because we're always, folks, when you're a Forex trader, people always say, oh, well, you're looking at it both ways. Anybody can do that. That's not the truth. You have to be prepared to go both ways and not get married to this idea that it's always going to go one way forever, because it's not the case. So if this happens, I will do this. However, if this happens, I will do this. And that way you are prepared for whatever the market will give you. You have a strategy for one way or the other. So if it breaks down below 9,800 with some juice, then it pulls back, there could be some selling, like what happened over here. The same thing could happen over here if the rejection continues. This part is a good sign so far. Like we've said before, we've taught you before in these videos, we'll teach again. When you get to a significant area of support or resistance, and you start getting multiple 4-hour candles rejecting around 2, 3, 4, 5, 6, sometimes even 7 4-hour rejection candles at a significant area of resistance. Folks, that's the big boys. That's price action telling you there's a chance that it could drop down quite a bit. And that's a specific way that we look to trade off of significant areas of support or resistance. Look at the rejection candles. 1, 2, 3. Holding up at this red level. Buys up. Again, same red level in the future. 1, 2, 3, 4. And eventually bought up. And for our trade management, 20 to 30 pip stop loss is consistently what we use. A 60 to 70 pip win is pretty fantastic, and you can get much more than that as price continues to travel in your favor. So we have good risk reward that we like to employ. And also, we take the risk out of the trade fairly early. 12, 15, 20 pips, we take some profit off and move our stop to break even. So we don't have big losses and we don't have a lot of drawdown. And we do have good risk reward, okay? So that's what we're looking at. So if this were to break down and drop down to the area, that could be a pretty good trade through there. Does it make sense? Now, conversely, what happens in the past, we go back to this area on the weekly chart. What if we reject around for a while and we blast above this level we're hanging out at 98.35? Well, then historically, it's got quite a bit of room to go up, 600 plus pips. So then what? Well, then, if we don't continue to drop around and we don't drop through this 98 level like history shows could happen to give us this selling through this range, and rather instead we break above the top, then we'll look for a nice 2 or 3 or 4 candles on the 4-hour chart to go above that level, and then look for more buying up to the higher spot. So we're prepared either way. It's a little bit of a chopping around area. So our system would have given sells up here, and then we'd be waiting for a move to further solidify an opportunity in this CAD yen. Okay? So keep an eye on these are specific levels. 9,900, 2 or 3 or 4 candles go above that, pull back and buying on the CAD yen. If it breaks below 9,800, 50 or 100 pips below, and the 4-hour gets a couple closes down below, then a pullback could sell. Okay? Very specific directions for you to be able to make pips one way or the other, whichever way this thing happens. Okay? Now, let's return to the euro yen that we mentioned in yesterday's video really quickly. All right, now we said yesterday on the euro yen, if we rally up near this area and we begin to reject a lot rather than break through this 130 spot to trade toward 131.10, or even better yet, to break above 131.10 in a similar fashion we just described in the CAD yen, then if we did the breaking up, then there could be buying. However, what happened? This was before the video yesterday. This was what was happening as we were making the video. Did it break above that level and give us 3 or 4 candles above that level to pull back and then do some buying? Nope. It rejected that level this way. So our MACD3 trading system, the first tradable opportunity that would have come from that trade would have been here. See, because what we specifically said was to watch to see if it begins to emulate this look over here, dropping down, giving red candles, dropping down, giving red candles, rallying up and selling in and around these areas where it sold before. Guess what? The very last time we went into a drop down in this area, it rallies up between 50 and 75 and starts to sell. Now, have we blown down through this level yet, this 129 level? No. But if we did, history shows 100 pips coming down from there. History shows 400 pips coming down from there. History shows 200 pips coming down from there. So if the euro yen continues to progress, there could be a pullback and more selling. So guess what? Comes down here, this candle closes. Okay, we're not breaking up. We're coming down. And in history, it sells off between 50 and 75. There's lots of wicks at 75. This is 75 right here. This is 75 to 50 in this region. Guess what happened? No surprise. It rallied up near between 50 and 75 and gave a trade entry for the MACD3 trading system with which would have had a 20 to 25 pip stop loss right here. Okay? And that dropped down 60 pips and happened after today's U.S. market. So 60 pips on a 20 to 25 pip stop loss, that's a good chunk of pips. Does that make sense? So when we say look for an area to reject or look for an area to break through, we're serious about that. And it'll go one way or the other. And once it goes one way or the other, you look for the opportunities to trade your system in the direction of which way it goes. Sometimes we've had breakouts to the upside that allowed a trend continuation trade to happen. These are all kind of reversal trends. And we also, on this euro yen, have quite a bit of rejection. 1, 2, 3, 4 weeks closing and holding this high. So if we continue to get rejection, we could easily drop back down to the bottom of this weekly channel at 125. So keep an eye out for that. That's just a follow-up. All right, folks? Okay, so that's how you do it. That's how you use this information. You know what you're looking for in the CAD yen. Let's see if we can get some opportunities with those two moves we're looking for, one way or the other. And we'll see you for the next video.